Great. Well, good morning. Welcome, everyone. We are here today to talk about how a very promising set of new companies, that have grown businesses out of India, have the ability to access global capital markets. And we couldn't have a better panel to discuss this. I'd like to introduce you to Sonjoy, who runs Goldman Sachs in India, chairman of Goldman Sachs in India, but has been an advisor and a banker to many of the more successful entrepreneurs and large companies in that country. We have Bob McCooey, who manages the APAC business for Nasdaq, which is probably the most desired exchange for these companies to list at. And then we have Umesh Sachdev, who is an entrepreneur who has grown his business out of India, has built a business that has now presence in many different international markets, has moved his headquarters to Palo Alto, and has moved from accessing capital in that country to accessing pools of capital globally. And obviously, at some point in this trajectory in the next few years, hopes to be a listed entity here in the US as well. So with that, let's get started. Here you go. Well, welcome everybody, and let's get into this conversation. I think what we'll do is we'll start with Sonjoy with just your background and having seen the Indian ecosystem evolve, having helped a lot of really successful companies and entrepreneurs with their capital formation. Tell us a little bit about what's going on in India and a little bit of, sort of how things have evolved.
Thanks, Sumant, and thank you very much for including us in this discussion. I'll take you back maybe a couple of decades. I spent the first half of my career with ICICI Bank and the last 11 years with Goldman Sachs. And I'm reminded of the time that when, frankly, capital was very hard to find in India. And ICICI did its first ADR. That was the first time the Indian flag flew on the New York Stock Exchange in September of '99, raising a very princely and valuable sum to ICICI in those days of $315 million. And it's come a very long way. We had one company raising $25 billion last year in India through a variety of pools of capital. So I would say that, where India was in the 2000s on the back of all the global liquidity and capital flows, and where it is today, despite all the constraints that we have seen in recent months and in the last year, it's certainly come a very long way. And I think the answer to that really lies not in the in what's happening in global liquidity and markets right now, but really goes back to what we saw about 5 years back, the very deep structural changes that have been brought about in India. Structural in the sense of tax changes, reduction of corporate tax rates, the very important piece of GST legislation, which was badly required to set a fairly, warped tax structure into a much more seamless tax structure. A lot of regulatory improvements, both from the securities market regulator, the central bank, the introduction of a very strong bankruptcy code. India never had one until 2018. And that has done a lot in terms of how asset resolutions have taken place. And overall, a huge governance shift in Delhi, which really started after Prime Minister Modi came in power in 2014. The period just before that was marked with all sorts of issues, largely around governance. So on the back of that, what I call several structural changes and the overlying kind of dominant factor of governance, I think India has seen record capital flows, private capital flows, largely led by private equity, venture capital, sovereign funds, public capital flows. We had in excess of $40 billion being raised last year. And now, I think, which is very pertinent to our discussion today, the whole big focus on IPOs. So that's how I would characterize what's changed in India.
Look, when I started out in India in the 90s building my own companies, the only capital I had access to was the family. No one else would give you money, right? So I think the ecosystem's come a very long way. So Bob, Sonjoy was a little hesitant talking about the New York Stock Exchange, but I'm guessing you were there when that IPO happened, if I'm not mistaken, or close enough around that time. So a little bit of your background, what do you do, how you bring access to capital to companies would be great for our audience to hear.
Thank you, Sumant, and nice of you to bring that up, especially in the context of this. So my name is Bob McCooey. I'm the chairman of Asia Pacific for Nasdaq. I joined Nasdaq about 15 years ago after a career building a business. So I started out as an entrepreneur. I started a financial business primarily on the floor of the New York Stock Exchange, and then so I would have been there when Sonjoy was there, ringing the bell at the New York Stock Exchange, and saw the changes that were happening in the market in the early 2000s, and left what I had been doing, and I was also on the board of the New York Stock Exchange, and came over to Nasdaq to help, as we say, rewrite tomorrow and create the future for amazing entrepreneurs. And I look forward to bringing Umesh into this conversation later on. But we have always focused on India as just a tremendous opportunity for entrepreneurs to be able to access global markets. And we are a big believer in the interconnection of global markets, the support for global markets. And little do many know, but one of the major businesses that we have here at Nasdaq is a global technology business where we provide both the matching technology and or regulatory technology to over 130 different exchanges, including the NSE is a client of ours. So we're the power behind NSE. And so we do a lot for the community there. We believe in strong capital markets, and excited to be engaged in this discussion at what I believe will be an inflection point in the capital markets in India, as hopefully they are going to open up more. My colleagues have joked that I have every year for the past decade say that this is going to be the year for India. It became kind of an internal joke about it being the land of great hope. But when you have a market as large as India, when you have a total addressable market as vast, when you have such great entrepreneurs there, there's no doubt that India will produce some fantastic public companies. They already have a number of fantastic private companies, but public companies allowing more investors around the world to access the market and access the growth that we know India has on its horizon for decades to come.
Which is great. And, when you said it's the land of hope, I went back to the early 90s when I moved back to India to start my businesses, when it was just opening up, when there was a quote unquote privatization was happening. I don't know, Sonjoy, if you remember that decade. Boy, it takes a long time for things to happen. So, Umesh, let's move to you. You started out building a company in India and built your technology in India, raised a ton of money from, or no, let me say not a ton of money, from a ton of people, lots of money. Talk a little bit about your journey of really accessing capital and how over the various stages of the company, well, first maybe talk a little bit about the company and then a little bit about how you had to sort of go out and raise capital. And how do you think a company becomes relevant to the global capital audience?
Sumant, once again, thank you for having me on this. I'm Umesh, Sachdev, founder and CEO of Unifor. We're an AI and automation company focused on the front office of an enterprise. Like Sumant mentioned, I founded this company in 2008. And this was a unique story. We still don't hear a lot of these, of a technology incubation coming out of an Indian university. This was IIT Madras, where we started tinkering on technology, decided to monetize it, form a business around it. And 13 years later, here we are with our headquarters in Palo Alto and a global company. Like Sumant said, the several first years of the company, we were headquartered in India. We raised capital. Even back in 2008, this was the time most people would remember, the same year that Flipkart was also founded. And Flipkart is to date one of the largest exit stories from a software space. Walmart acquired it a few years ago. But even back then, venture capital wasn't as big or as hot a story as it is today in India. And so it took us a few years to raise the seed capital from angel investors, high net worth individuals in India. The VC ecosystem, I'd say, really in the post 2010 era started to develop. Lots of funds came in, lots of India arms of global multinational funds got set up, domestic funds were started to be created, and software in general was hot trend. It started out with, I remember, B2C and e-commerce kind of being the initial big wave. And then over time, B2B SaaS became the flavor and an important cog in the wheel in terms of raising those capital. So we raised, let's say, our seed, Series A, Series B round while we're still in India. And then we transitioned the company to be a Silicon Valley headquartered company, because at some point, majority of the business was coming from North America. Most of our customers were here. And so we moved here. And after coming here, we raised a couple of rounds here in the US as well from very noteworthy investors, one of them being March Capital. Thank you, Sumant. And so to come to the question of when does an Indian startup become relevant to global investors, I think it depends on the segment itself. B2C, I'd say, is still a pretty hot segment in India. India with 1.3, 1.4 billion people, still a very deep consumer market, both in terms of users, eyeballs, and now growing economically as well. And so, we've seen that international investors, overseas investors into India have invested in domestic B2C plays, whether it's payments, e-commerce, logistics, and things like that. B2B software, though, is a very different story. B2B software, the Indian enterprise segment is not as deep as, say, North America or China. And so on the B2B side, we've seen companies having to go outside of India very quickly to find customers. And as the customer concentration shifts to more deeper markets like North America, is when I've seen the trend of, say, US investor or a European investor or an Asian investor from Japan or China taking interest, because then the company starts to hit a growth rate which is much higher than a company just focusing on the Indian B2B segment. So I think it depends on the B2B.
Sort of what you're saying is capital follows your business as your business develops. And so interestingly, what I actually was interested, Sonjoy, in your opinion, look, in the Indian liquidity availability in many ways is probably a 10th to a 20th of what it would be here in the US. I'm using sort of big generalities in that, but looking at the size of the economy, is looking at the size of IPO issuances over the last year, sort of relatively, it's in that kind of ratio. What have you seen when you said it's probably hit an inflection point, and what's, in your mind, what drives to that? What do you think is the inflection point, and what's the availability of capital in India today?
So right now, Sumant, it's pretty high. It's pretty high because of everything that has changed in the last 1 year around global capital flows. Remember that the calendar year 20, India is the only country which saw almost $25 billion of net inflows compared to the rest of the emerging markets. And I just give you a number of plus $40 billion of capital raises last year. So, and you just look around you. Let's take portfolios of large PE companies. And if I may mention that, Blackstone, their most profitable portfolio is the Indian portfolio. So people have seen this success. And on the back of that, you today see multiple entrepreneurs, serial entrepreneurs, funding ventures. You see the quality of talent that is coming into these startups. Again, on the back of successful secondaries. You see the time that PEs are taking to monetize their assets. What might have been 6-7 years is suddenly now 3-4 years. So when you match all these together, you suddenly see a huge flow of capital.
So you see inflows, but are you seeing outflows as well, Sonjoy? Are people seeing liquidity from their portfolios, or is it still, that was always the suspect question in India, is how do you create liquidity of these companies? Have you started seeing that happen?
You're absolutely right. And I dare say that's a very valid question, maybe until a couple of years back. And everything seems to have changed in recent years, and people are exiting portfolios far quicker. If I pick up the top 5 private equity players, I look at Blackstone, Carlyle, In fact, one of the Carlyle portfolio companies, by the way, was the largest IPO with a $10 billion value, SBI Cards, last year, early last year. When I look at KKR, TPG, Bain, Carlyle, Blackstone, when I look at these five firms and I look at their portfolios, they have had very easy and early exits compared to what they would have seen, let's say, the 10 years prior to the last couple of years.
That's music to my ears, because whether it's my investors or my partners, everybody questions, why the heck are you doing this in India? It's so hard to get money out. And it really isn't. I think the market has matured. Now, you're right. And, Bob, if you were to look at what Sonjoy just said right now, and then look at potentially, yes, we have a couple of regulatory hurdles in getting an Indian company to go out and list. It's hopefully that gets resolved. At least the intent is to get that resolved. What are the lessons that some of these companies looking to access global capital markets should learn from your experience of having seen this from other countries like Brazil or others that you've had exposure and experience from? Like, what is it that you see in the Indian sort of collective ecosystem that still needs to mature or to understand about global capital markets? Or is there anything?
Oh, first of all, Umesh talked about where he is today, but not where he was, and how he built the business and then moved to Silicon Valley. And I've been quoted as saying multiple times the fact that entrepreneurialism is not a U.S., not American owned attribute. There are great entrepreneurs everywhere around the world, and whether it's Brazil or China or Singapore or Israel or India, there are fantastic entrepreneurs building amazing businesses. And that's what the capital markets continue to support by allowing those entrepreneurs to exit their businesses. And the more you have opportunity there to build businesses, and the more that the ecosystem invites not just the large private equity firms that Sonjoy referenced, but also the Lightspeeds and GGVs and Sequoias and the venture firms that have been
March
so
Capital.
Successful, and March Capitals, who have been so successful in India also. I guess I should have started with March and then gone down. I'm sorry. I apologize. Please tell Jamie not to hold it against me. But the one thing that we've seen in a lot of other areas is that entrepreneurs who build businesses and provide exits then continue to invest in the ecosystem. So it creates a flywheel effect where an entrepreneur in Brazil, Argentina, some of the founders of Mercado Libre founded Kazek, and now have provided seed money for a tremendous number of entrepreneurs through their fund to build businesses, which allows those entrepreneurs to build their businesses and either exit through a trade sale or exit through IPO and then reinvest that money in. And I think that is what will continue to happen, not only in the markets that I referenced, but also happen more in India. Again, we get back to the amazing total addressable market and the fact that when you're a successful entrepreneur, it feels like you have a lot of ideas. And so it's not just the one that you're working on 150% of the time that's in front of you, like Umesh is doing with his business, but it's what the other ideas that come into his large brain and that he would love to do to help others. And then it is that community of helping others, that the entrepreneurs are givers. They want to help other entrepreneurs to build businesses too, and are supportive of their local markets. And so I think that those are some of the factors I see.
Yeah, very interesting sort of developments around this in India as well. And, I'm going to have Umesh talk a little bit about his initiatives around helping other SaaS companies get off the ground and the various forums that he's involved in. But for us also, we've seen sort of the repeat entrepreneur. see where our repeat relationships, not even repeat entrepreneur, is where we see the most success. And so there is definitely a pattern to that. But Umesh, talk a little bit about your initiative with John Chambers, touch a little bit on SaaS, the SaaS ecosystem that you see developing in the country.
Yeah, I think the issues that Bob picked up are very relevant right now in India. The entrepreneurial ecosystem is multiplying as we speak, and both in quantity and quality. And so a couple of initiatives that I'm part of. There's a movement in India that some of us startup founders got together and we called it SaaS Boomi. Translated into English, it means land of SaaS. Because specifically down south,
SaaS as in software as a service, SaaS.
Software as a service, and the name of this, we set up a conference called SaaS Boomi, and we said it's by entrepreneur for entrepreneur, and the whole purpose was that some of us who've crossed the chasm, raised a ton of capital on our path to either IP or exit, whatever the case may be, let's get together and share our learnings as a paid forward mechanism to the next generation entrepreneurs. Pre-COVID, just last year in 2020, there was a conference done in person in January before everything had to go into lockdown. And we had 10,000 early stage B2B SaaS founders who registered for the conference. We couldn't accept everyone because it was in person, the hotel ballroom wasn't big enough. And so we now know that there's that kind of action happening domestically in India. The other thing that I'm part of, like you mentioned, with John Chambers chairing the organization, this is USISPF, a premier trade body between US and India, stands for US-India Strategic Partnership Forum. And it has membership from most of the Fortune 500 CEOs, and it basically represents trade interest on both India and the US side of these large companies. We created a startup program in it, which I chair. And again, the purpose of this program is, if you think about the chronology, there's SaaS Boomi in India helping early stage entrepreneurs, telling them what to do next, how to raise Series A, Series B. Once people have raised Series B, let's say US becomes their natural market of expansion, just like it was for me and a few other friends of mine who've come here, made successful businesses. A couple of them are on the path to IPO. And Bob, Nasdaq would hopefully soon see a couple of customers through that network.
Had to drop out of this panel because they were not allowed to speak in their quiet period.
There you go.
We had to deal with that now.
And so with that group of entrepreneurs and founders like myself, we've got together. I chaired that. And again, what we're doing is for people who are in the US-India corridor, scaling up their startups, rapidly scaling up. It's a paid forward. How do you land in the US? How do you raise capital in the US as an Indian founder? How do you hire first employees? Tap into the networks of first customers? And the fact that Fortune 500 CEOs are part of this membership, like John Chambers, it's also a great business development opportunity. So through these initiatives, we are seeing a massive acceleration of startup in the US-India corridor. And I'd say specifically it's B2B SaaS, software as a service.
And I will say, just for our audience's sake, this is very new. I mean, this is sort of is very nice to see. And as a firm, as a fund, we're super excited to see companies like Umesh sort of come out and really build world-class technology companies out of India. Sonjoy, going into a slightly different direction of conversation, India does have very large existing real-world businesses as well. Family controlled, but have been around for a while. And then you have this surgence of new technology-driven businesses with two flavors. And as Umesh said, one is flavors like the BillDesk of the world, which are serving the Indian consumer. And then flavors like Umesh, which is sort of building a product and then taking it out and trying to win in a global sort of ecosystem. In your mind, as someone who is in a position to advise them in terms of both capital formation, strategy, relationships, how do you see this ecosystem, the three different worlds coming together, and what's your advice to each one of them as this world is changing around us?
So I think one clear factor that everybody's focused on is scale. And everything that has happened or changed in our environment in the last 1 year has a lot to do with how people are scaling up in the digital world. So digitization and scale are two very important things. And if you step back and think for a minute as to, we had a fairly, I would say, thoughtful budget this year. As you know, the Indian budget does a lot more than just talking about revenue and cost and expense numbers. It does a lot more in terms of what's the policy direction for the government. And for the first time, I kind of stepped back and looked at a budget which really spoke about not just what should be in the next year, but where does India need to be in the next 10 years? And that's why you saw enormous amount of focus where the Prime Minister himself is saying that we should not have public sector enterprises, except in a very few sensitive sectors like defense and a few other places. The extreme focus on AI, which is very close to your heart and some of your investors, and where India is going to play on that AI curve, on that whole tech curve, how it's going to respond to it, how it's going to attach itself to it. And something that which is coming through very deeply for the first time on a spending side, the whole aspect of the core of infrastructure, education, hospitals, roads. I think these are the three big things they're focusing on. And the Prime Minister very eloquently kind of suggested that, why should we run inefficient public sector enterprises when we can boost those efficiencies and actually transfer the returns from there into these core infrastructure sectors. So when you look at all that, you see a very different path forward for the next 10 years. With that as the backdrop, I think scale, digitization, you mentioned about B2C, Umesh's business, of course, we discussed. So all that is going to play a very deep role. I think if I look at trends within financial services, if I look at trends within consumer retail, there is a big push towards omni-channels, big push towards disintermediation. There's a big push on mobile and digital payments to increase traction. And underlying all this, kind of cutting across all those different constituents that you mentioned, is a very strong consolidation. So a very recent example is everything that I've read in the media is Tata's acquisition of Big Basket. Yeah. Now, Tata is the second largest retailer in the country, but suddenly they have realized that you need to be in the digital space. And here you have Big Basket with a 45% market share in online e-commerce for groceries. And Tata's decided, no, I must get into this. And Alibaba, as the largest shareholder in Big Basket, exits. So you see that whole overlay between the large traditional conglomerates, Reliance Industries, Tata Group, Bharti, the Aditya Birla Group. You see the large digital players. We discussed Flipkart and Walmart right in the beginning, Walmart coming into Flipkart and everything that they're planning. And then suddenly you see that, everything is looking very connected. And the underlying filters are what I said: scale, consolidation, the digital map, B2C, and of course, underlying B2C, B2B. And how does people play in that whole ecosystem?
So, another one discussion topic, which I think, and Bob, I'm going to include you in this, is when you see a company which has built its business in India for the Indian audience, and then you see a company that's built its business from India for a global audience, does that change your perception of where they should seek liquidity, whether they should seek liquidity in India or they should try and access global capital markets? Or is there any difference?
So frankly, there should not be. You're talking about software platforms, and I can't take a couple of those names.
In my world, it's mostly technology or technology-enabled services, software.
Absolutely. And I've seen people who have actually built their business, their markets are outside. Companies are still headquartered out of Bangalore or somewhere in India. Very different local team. But yes, you do have an opportunity to list some of those businesses in the US. And I know this is a large part of what you wanted to discuss, Sumant, today for our discussion. But you clearly see a position as to who are those people who can go to the US markets, which are obviously deeper and more liquid than where Indian markets right now are for the IPO opportunity. And right now, it's only the really large market leaders that can go. And they can go
certain size and scale before you can access.
Yeah, the mid cap cannot go. Cost issues, regulatory issues, and you are aware that, and I'm shifting topics. There's a regulation coming through very shortly for India to really build that whole what you call the ability to list directly outside. But I dare say it won't be open really for mid-sized companies. I think the leaders will go first. The large-scale guys will go first.
So, Bob, here's your chance to do a pitch for why it should be Nasdaq.
Thank you, Sumant. But I have preached the fact that most companies belong in their local markets. So our goal at Nasdaq is though we have teams on the ground in India and China and Singapore and Hong Kong and Australia and Japan, their goal is not to go in and convince all of the companies that are in that market that they shouldn't list on the local exchange and that they should all come to Nasdaq. That would be nonsensical for us to try to make that argument. There are a small group of companies, and I can use China obviously as a proxy, and there are literally thousands of companies of all shapes and sizes, between the third board up to the Star Board and the Shanghai Stock Exchange and Hong Kong Stock Exchange, who go public in China every year. There are about 35 to 40 companies over the past decade per year that have come to the US markets, across both markets. We've been so blessed to have had the vast majority of them come to Nasdaq. And different than what Sonjoy was talking about, we get ones that are quite small. We do get some mid-sized companies, and we've gotten some very large companies who have made the decision that they want to sit alongside the global leaders that are Nasdaq. We have the 5 largest technology companies in the world, 5 of the 6 largest companies in the world that are listed on our market, and are all $1.5 trillion market cap or higher. But we still have plenty of other companies among our 3,500 companies listed on Nasdaq that are of much smaller size, and we support each of them, equally, and find ways that we can make sure that they are engaging with and accessing the markets in a way that helps them to improve their business and their access to global capital. And I think that's really the point, is there will be people in the local markets who have a local footprint and really don't have global aspirations. Umesh clearly has global aspirations for his business. So that's one piece of it. And then it is into liquidity, services, support, fees, other line items that someone would use to analyze what's the best place for their company to be listed.
So we introduced Umesh to the CFO of CrowdStrike, Bert, who's joined his board, and so that's the direction that we want him to head into. So let's hope he gets there. But that was a great listing.
That was a great listing. We love CrowdStrike. We're very proud to have them listed on Nasdaq, and I think that we have been the place for entrepreneurs for, we just passed our 50th birthday last week. But certainly for the past 25 years, we've had the companies that have literally changed the world. And we believe that the companies that have come to us today will be the ones that'll do it for the next 25 years. And that's why we're really about, our tagline, which is to rewrite tomorrow. The game-changing global companies who are really focused on disrupting and changing the future are the ones that have been attracted to Nasdaq, especially in technology.
There you go, Umesh. That's a pitch to you directly. Sonjoy, I'm going to ask you a question and then move into a different topic. Is it fair to say that the Indian stock market listing attracts a different type of company? Maybe it's not growing as fast, but profitable and is better suited for that versus someone that's growing 100, 200% a year and burning a shitload of cash, which is most of our companies?
Yeah, I think you're right to some extent. There is a strong profit filter that Indian markets look at. I must say the sectors that Indian IPOs, what you would typically see in Indian IPOs, which was largely consumer tech, financial services, has now changed to even all sorts of sectors, industrial sectors, chemicals, of course, pharma, which anyway is a bit of a flavor right now. So the kind of companies that are accessing the markets today are including almost a very diverse sector. So that bit has changed. But there is a focus on the bottom line. There's a focus on the margins. And you're absolutely right.
Still the same group of Fidelities and BlackRock. I mean, they do have presence in India as well, right? So you have access to those larger players.
Yeah, they all have presence in India, and everybody has a tech-focused unit within that. A large part of what we do sometimes is go and access these same funds for pre-IPO discussions, which is often an interesting route to take, ahead of an IPO. So there is a play from that, but you're right. In terms of every global investor is here, every FII is here, but nevertheless, that filter is a bit different in India compared to what you see large revenue multiples, purely revenue multiples elsewhere.
So, Bob, here's a hot topic for you, which is a constant topic of debate and discussion in our partnership. It's a 4-letter word, starts with an S, ends with a C, and has a P and A in the middle of it. What do you think of SPACs, and how's that going?
We love SPACs. We've actually been doing them on Nasdaq for 25 years. Actually, long before our domestic competitor actually allowed for SPACs. They only changed their rules about 3 years ago to allow for SPACs to be listed on them. They've accounted for 70% of the listings so far in the first, whatever we're in, 6 or 7 weeks of the new year. As we've done, by tomorrow, we will have done 160 IPOs so far on Nasdaq, and SPACs have been a tremendous part of it. And you have everyone from corporates now to great entrepreneurs to former senior executives of public companies who have gone and formed their own SPACs after leaving their roles, to obviously the financial sponsor community, who are very much involved from the private equity and VC standpoint. So we have been embracing that as really a new way for companies to go public. It's not really about the SPAC, it's really about the business combination. And so we, honestly, Sumant, we've spent a lot of time with internally to make sure that we're using our assets, our resources to help the sponsors of SPACs during that period of time between announcing their business combination, closing that business combination, and using the investor relations advisory tools that Nasdaq owns and provides to companies to help that to be a seamless transition, and that they have the right cap table on the other side of that transaction, moving from a lot of retail investors who have gotten very interested in SPACs to now an institutional base that you're going to really want on the other side of that business combination. So we embrace them. We think that between traditional IPO, SPACs, SPAC business combination, direct listings, there are multiple ways for companies to come to the U.S. capital markets, and we are going to be supportive of each and every one of them, because it's a very individual decision by a founder, a CEO like Umesh, by a financial sponsor like March, to and banks like Goldman, as to how a company comes to market. And we want to make sure we're there to support each and every step of the way.
So, Sonjoy,
if I may add, Sumant, sorry, because I started on the wrong foot with Bob clearly with my NYSE example. I thought I should tell him that we just, as of day before yesterday, our largest portfolio, Goldman's merchant bank's largest portfolio company in India, Renew Power. So we have just announced a transaction, which is actually a merger with a SPAC. And we are hoping it will list in the Nasdaq, and so very much what Bob has been speaking about, and it's a renewable energy.
I'll talk right after this, okay?
And and it's a great reverse process, Sumant, and this is a kind of an enterprise value in excess of $8 billion. And it's a renewable energy company. Goldman actually started this company almost 9 years back. And this is now a great example that, yes, you can have a great reverse merger process with the SPAC for an Indian company. And if I may say so, that it would have been tough for, seeing a great, IPO listing for Renew in India, at least now. Maybe it would have happened a year later or a couple of years later. I don't know.
An Indian company?
It's an Indian company. It's a renewable energy company. It's got almost 7,000 megawatts of running wind and solar power. And the founder CEO there, Sumant, is your namesake. His name is Sumant Sinha. We promoted him almost 9 years back. We initially held in excess of 95% of the company. Now we are down to 48.5, and of course we'll come down more as we discuss this. But that's a great example of SPACs being put to work, and maybe this will set up a big trend for other companies who want to follow this same route for a listing.
And so, an Indian company as registered in India can use a SPAC and list in the Nasdaq?
So, yeah, I mean, there is a mechanism to do that. And right now, as we speak, we are flooded with discussions around that. But the current tax and merger regulations are kind of not entirely clear in terms of how everybody will really go out and reach there. But suffice to say, Indian startups are warming to seeing SPACs as an option to listing, and then accessing that as another pool of capital. Of course, the bigger discussion is also how sustainable the whole SPAC liquidity is. That's a different discussion altogether, and how long this will continue. But for the time being, it looks like another attractive route, and we'll see the next few months how they come through.
So, Sumant, it does feel like there is just continued interest in SPACs being formed, SPACs listing, and then the business combination. And I will say that I spend a good portion of my day talking to the financial sponsor community. And one of the questions, or one of the topics that we really talk about, are SPACs. And there's obviously two flavors of that. One is when I talk to them, if they have already done a SPAC, how's it going? Or are they considering forming a SPAC? And then the other is how much inbound they're getting into their portfolio from SPACs. Oh, yeah. And that's really another layer. And just to share with you a comment that was made on a call earlier today, the partner said to me, I have regular Zoom fatigue, and now I have Zoom SPAC fatigue with the number of inbounds into want to discuss our portfolio.
Yeah, what worries me is that there's a lot of money being raised and not enough high quality potential targets that deserve to be public. And so what you're seeing happening even in our own portfolio is people approaching companies that shouldn't be public yet. And that worries me a little bit. It's maybe I'm old fashioned, but I kind of feel like public markets need a little bit of predictability. And so when a company has that, it should list. But it's very relevant to Umesh, because we've been having this conversation in the last 48 hours, whether we should continue to go down the private fundraising route or look at SPACs. And if, Sonjoy, you had to advise him in why one versus the other, what would be the high level? And I'm using him more as an example. Why one versus the other? He's going to be in the hundreds of millions of ARR relatively soon, and companies growing more than 2x, 3x every year. It's a high growth, very exciting company. What's the potential? What's the reason to use a SPAC?
So I'll tell you our own example, since that is very, very recent. Not only did we obviously ensured a listing, but we raised almost $900 million of primary capital. And that was a great conduit in terms of how the company's future looks, and obviously how we as long-term shareholders kind of look at the whole business in terms of how we see our own future exits, which all of us, there is RDR, there's Canada Pension, all of these are investors in this company, which wasn't very clear to us prior to this. Mm-hmm. So there's a clear, very critical, access to capital, and very important for all investors, as it would be for you. The second is, if you step back and think for a minute, that what does it take to be a listed company in India, and all the threshold, the filters, there are a lot of regulation around it. And I think SEBI has done a lot of work to ease the regulation. For example, it says that if you're a listed company in the US, you won't be considered a listed company in India, which is very good from a regulation point of view. You'll obviously comply all the listing regulations in that other market. It has done a lot of things. India has this big issue of, which Umesh, of course, knows about, and I'm sure Bob also knows, the concept of the promoter. Like, who's the controlling shareholder? And many of these companies don't have controlling shareholders. And institutional investors don't want to be called promoters. So SEBI has kind of found its way around that and relaxed. For example, Renew. Of course, we were the largest shareholder, but we were not the controlling shareholder. We were not a promoter. And the promoter, in essence, didn't have much stock. So that has eased off a lot. The takeover target, because obviously which gets triggered in public listed companies at 25% in India, is 49% for, if you just, go ahead and do some of these tech listings. So SEBI has found its own way to really encourage people and found its way to encourage, not people, tech companies, to find a route which is more amenable and suitable for how they're looking at their future and overlaying the capital needs for them from the public markets to make sure that their path doesn't get disturbed.
Yeah,
so I would encourage it. Yeah. It's definitely encouraging.
I think we've all been waiting for that hope to be realized, Bob, as you said. And it looks like there are some glimmers of sunshine peeking through. We have a couple of
including. I'll just make one more point. Lock-ins. They've relaxed lock-ins also for certain classes of investors. They've said that actually there is no lock-in. So those are all great moves they have made, and to make it easier for the tech companies.
Well, we have a few minutes left, Bob. Any parting thoughts or comments, or you want to leave the audience with through this discussion?
Well, we're very excited. I started my comments by talking about India and just the amazing companies that are being built there and the amazing market that it is. And we would be so honored and blessed to have some of those companies be listed on Nasdaq in the future. And I think the regulation that will hopefully allow that is being called the enabling regulation, as far as I understand. And that's really a wonderful name, by enabling opportunities for entrepreneurs, for financial sponsors who have helped to build amazing Indian companies, to bring them to other markets. We hope that many of them will come to the US and specifically to Nasdaq. We think we're going to be the natural home for a number of these entrepreneurs, especially in tech, but really as being the leaders in healthcare, with 30% of our companies being healthcare companies, and consumer and financial services. We really have a broad base of companies that are, as I said, disrupting markets and changing the world. And so we're excited about what the future is for India, for the Indian capital markets, and for great entrepreneurs like Umesh and the business that he's building.
So hopefully, Umesh, you're inspired. Any thoughts for the audience?
Well, my parting thoughts for this session is, the Indian startup ecosystem has never been as active as it is today, both in terms of number of startups, quality of startups, VC ecosystem, particularly in the B2B SaaS, a space that I track very closely. I won't be surprised if we see in the next 5 years 500 IPOs from Indian origin B2B SaaS companies. And Bob, that's the pipeline that you should be working on.
Sonjoy, anything to add?
Yeah, taking on from what Umesh just said, this is possibly the best time to be a tech entrepreneur in India, because you just have so many pools of capital available to you. You have the public markets in India at its absolute robust best. You have the US SPAC market. You have this so-called US direct listing. You, of course, have a lot of private capital flowing in, whether it's venture capital funds, you have the private equity funds. So it's the best time to be in India and be an entrepreneur, because you just have so many options open. And these options were not there, I dare say, even a year back. And India has seesawed between private capital markets giving better valuation, and now today public markets are giving better valuations. SPACs seem to be giving even better valuations. So this whole host of opportunities is going to create an extremely vibrant ecosystem for tech entrepreneurs, which I think will be very valuable for India's growth and future.
Well, as someone who's been investing and defending India for the last 15 years, it's great to hear. My first investment was 2006. And so it's, finally starting to see, feel like it is catching up to the opportunity set that China allowed people to have over the last 2 decades, that the US has over the last 4 decades. And so it's wonderful to see. I really appreciate you taking the time. I know we have more than 3,000-4,000 people that are joining this conference next, and hopefully they'll get some benefit out of this, and more excitement and energy comes towards our side and what we're doing in India. Well, thank you.
What you started, Sumant, in 2006, sorry to interrupt you, has now caught the fancy of every investor set globally.
Yeah, it just took an extra decade.
That's right.
Well, thank you very much, guys. Thank you.
Thank you very much.
Thanks.